Okay, guys, do a little sound check, video check, 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 check. Make sure you can hear my voice and see my screen. Welcome, welcome, welcome. Got you here, and hope if you guys are here, welcome to our Elite Traders University, the Forex Pip and Run Money Map, brought to you by Elite Traders University. My name is Greg McLeod, and it's great to be with you here on this wonderful Saturday, June 3rd, 2017. This is for the week of June 4th, 2017. And again, welcome to the Pip and Run Forex Money Map live on Facebook. Facebook Live. I'm streaming again. Hey, number 3. Well, actually, I recorded this earlier, but the sound was just totally messed up. It was using an external speaker. Blah blah blah. You know how technology is. Sometimes you can't live without it, and you can't live without it, right? Can't live with it either, right? Okay, and so this is where I get to share with you my scalping setups, my roadmap for making money for the week beginning June 4th, 2017. I'm glad you can make it here live with me, and I'm broadcasting to you live from Dallas, Texas. And hope you guys are doing well. Hopefully everything is going well with you, and you're enjoying your weekend. And maybe you just on your computer, maybe you stop by, maybe like saying, hey, what's Greg doing live on Facebook? I'm like, why not? I figure I could record this. And if you guys are online, you go ahead and type in the chat box. You can ask me some questions or interact, say hello or something. Give me a thumbs up, a share. You even share this if you like. And but meanwhile, this will be out there for you guys to help you for the upcoming trading week. Now, before we get started, I wanted to direct your attention to the risk disclaimer on your screen. Make sure you understand all the risks associated with foreign exchange trading, as you can lose any and all your money if you're not doing anything right. Even if you're doing stuff right, you lose money, right? And for those of you who don't know who I am, like, who's this guy? Who's this cat? Well, my name is Greg McLeod. I am the founder and CEO of the Elite Traders University. I'm a 21-year trading veteran and trading mentor. I've traded options, futures, Forex, stocks, anything with a chart, you name it, I've traded it. Okay, silver, gold, I've traded it. And I'm the foremost authority of short-term day trading and discretionary high-frequency trading. So I fire a lot of trades off really quickly, and that's what I'm known to do. And I spent 8 years as the currency analyst and trader coach at one of the largest Forex brokers in the world. I worked for Daily FX as a currency analyst as well. And so I spent also worked at a prop trading desk. I worked for a top-tier bank as well. So I have a lot of experience from behind the curtain, behind the scenes. I've been on both sides, the retail side and the institutional side. And so I'm uniquely qualified to be able to share with you how these markets are running, how you can profit from these markets, and how you can use them to change your life. Okay. I also spent 16 years in public education, teaching middle school and high school in the roughest neighborhoods of Los Angeles. And so I can teach, I can do, and I can teach. People say if you can't do, you teach, right? But I can do and teach, and I want to. So that makes me uniquely qualified, where I can actually, crank out. This is what I did this Friday, and I cranked out 47 trades, 10,538, scalping the market. That this is what I did. So there you go. So using the Xenia C Trader platform, I'm going to pop this link. If you want to take a closer look in the chat room, you can probably take a gander at that. But I teach my students how to do that as well, and so it can be pretty helpful for you. To learn from me that I do know what I'm talking about. Because, hey, the proof's in the pudding, right? Judge a tree by its fruit, and if it's full of nuts, run away, right? So anyway, that's about me and how I can help you. I mean, I started, I learned how to trade because I wanted to make an impact in kids' lives. Coming up in the inner city, I knew that the only the possible, role models you have are prostitutes and drug dealers and pimps. And guess what? When I went to college off to UCLA, came back to wanted to give back to the community and became a teacher in the same neighborhoods I grew up, found out that some 30 years later that was the same thing that was still affecting the young people today, that they only respected money and get their attention about education. It's a shame, but we're all motivated by money. You don't go to work for free, do you? And so these kids are they're a little short-sighted, but I was able to kind of show them, like, hey, you can make some money on the side. This kind of like this technical hustle here. with the stock market, with the options market. I just got my start with the options, and was able to turn a very small retirement account in teaching up to about $300,000, which is really cool. And then using the money to help the kids out and to show them that there's a better way, that you don't have to steal from people, you don't have to sell drugs, you don't have to sell your bodies, you don't have to kill anybody, you can learn what I'm teaching you, and you can be a success. But I made them learn hey, they had to learn their lessons first before they got to learn about Forex, about options. They didn't have to do Forex back then. This was circa 1996, okay, 95, and when I was doing this, but 93 when I was teaching in the inner city, all the way up in 2004, actually. And so a lot of things went on. So I come with a mission, guys, to help people, because those kids that didn't have an opportunity, who felt they didn't have any opportunity, who didn't know any better, who felt they were trapped. Well, guess what? I'm dealing with people who are in their 40s and their 50s, and they feel trapped as well. Feel trapped by their job, and also victimized because they're going to hire maybe younger people to replace them, and at a lower rate, and they have bills, they have kids to support, they have a wife to support, they have bills to pay, and they can't do it. And I think the best way to do it is, like Gordon Gekko said, real estate and trading stocks, and and I expanded to stocks, options, futures, and Forex. So that's my mission, is to help you make more money, because it means more money for everybody, and it makes the world a better place. When you have, you'll find people who are rich blowing things up. It's always the people that don't have things that are blowing things up, right? And once they have something, and they have something to live for, they don't blow things up anymore, right? So that's probably the answer to our terrorist problem. Our terror problem, our gang problem is, turn the have-nots into haves, but give them something, a skill like trading, which they can use that. Okay, that's my soapbox. I'm going to come off that soapbox and just tell you what our agenda is for today. And Paper Run Market Map, we're going to look at key levels of support and resistance for majors in gold, possibly scalp entries and targets, and we're going to also look at high-impact news, that events that can move the market. The news has plays a big part in the movement of the markets, as we could see. I'm going to show you the Dixie, this we had last week, where we had non-farm payroll, right? And we got, going up in the non-farm payroll. This is the U.S. dollar index, and I love trading the U.S. dollar index. Why? Because it's like buy one, get one free. It's like, hey, it's like getting a little bonus. It's like getting like shampoo and get an extra one taped to it, and it's free, right? Well, that's how the Dixie is. When you get the dollar index, it's a index against, it's the U.S. dollar versus a basket of currencies. Majority of it's the euro, okay? Now, when you look at the direction of the U.S. dollar, you can figure out pound dollar direction, Aussie dollar direction, New Zealand dollar direction, dollar CAD direction, dollar Swiss direction. So basically, you got like 7 other currencies that you can look at to find direction just by looking at one chart. And so right now, if you look at this, it's sideways. It's not doing anything. You go, God, Greg, this is boring. Well, this is Asia. Low volatility, got this little consolidation channel, like, pretty boring, right? So you can probably trade the range. This is the U.S. dollar index. The margins are high and the futures, blah, 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 but what you can do is you can trade the anti-dollar, which is the euro, which was in the opposite direction of the U.S. dollar. However, we're going into non-farm payroll. That's why everybody's outside the market. Nobody wants to go in. Nobody wants to get in front of this big news announcement. It could break up and go north. It could break down and go south. Our indicators and our method are showing us is that things were going to go south, and many of us already took advantage of that in our Elite Traders University mentorship, Forex mentorship program. And so, we get some information at the end on how to be a part of that. Okay. Now, the U.S. dollar index, I'm using this chart because guess what? C-Trader doesn't have the U.S. dollar index. Hey, guys, it's Spotware. Why don't you get the U.S. dollar index? I won't have to use these other charts, okay? No offense. I love TradingView, but I like sticking at one thing, moving things around. I'm not a big move. Anyway, here we go. 7:30, guys. Okay, kind of boring. Hey, break to the north side. Hey, you know what? Maybe non-farm payroll is going to be good. They projected 181,000 jobs to be created. 211,000 was the previous number, so it was going down anyway. On then 8:30, bam! South side breakout, boom! Sideways moving, a big drop. Why? Because it came out at 138,000 jobs were created. NFP stands for non-farm payroll. This is the U.S. jobs number, and that number is very important for setting the tone for the rest of the week. For trading. That first week of the month, and I've talked about it with the interview. If you saw my interview with Hugh Kimura and with a great guy over at Trading Heroes. Check out his website, Trading Heroes. Lots of great info, lots of great other traders you can learn from, be mentored by. TradingHeroes.com. That's Hugh Kimura. Big shout out to my buddy over there. Big shout out to Sean Overton over at One Step Removed too. I always talked about in those interviews. I talked about that trading was like peanut butter and jelly sandwich for me, looking at the calendar, where that crust was that first week. My dad used to make these peanut butter sandwiches I told you about, and he would use Roman meal bread. When everyone else was eating Wonder white bread back in the day, we ate wheat bread, Roman meal, and it was like sandpaper on the outside, and that top part, I would always peel that top part off. Then you bite down, peel off those side crusts, and then the bottom one. I'm going to peel up all the crust, and now I got that nice soft peanut butter and jelly center. Delicious, right? And the crust, I know, I'll throw it away. And my mom would say, think about those hungry people in other countries. Well, mail them my crust, okay? I mean, not to be harsh, but, I was 5 at the time, right? So that's why I look at the market. That first part of the week is choppy, right? We've got, no one knows what's going to happen. Non-farm payrolls in the beginning of the week. Then it comes out. And then we got and then now, the next week is pretty good for trading, right? Now, Fridays, you got people taking the days off. A lot of traders, they take off on Friday, take on an early day, and don't come back till like Tuesday, right? They'll take a 3-day weekend. It's like, wait, you trade. Why are you working all the time, right? The B team comes on. They tell the B team, don't do anything stupid, right? Unless it's non-farm payroll. And this is just no one in the market, right? And any price move is going to just create this gap, kind of a gap. So you might even see this gap you might even see some type of a gap fill. Maybe we see a rebound on Monday, right? But still, NASDAQ comes up, gap down, and the last week of the month is like that crust too, because why? You got hedge fund managers, money managers, they get paid on a commission basis that when they reach a high water mark. Now, if they made money for 3 weeks, why are they going to endanger their commission or their bonus on that last week? So a lot of times that last week of trading gets kind of wonky. And so I went to MyFX book, and I use, when I have my students in my Elite Traders mentorship program, and even my boot camp program, anybody that's connected to me in my courses, I tell them, get your demo account and your real account and hook it to my FX book, because it's a way of a third-party verification of your trading record, but it provides all kinds of data about like what days are you good, what days do you suck, what currencies are you good at, what currencies suck for you. I mean, it tells you so much data, and if you just weed out the stuff that's hurting you, then you just focus on the stuff that you're doing right, and usually traders can turn that around. The thing is, they don't want to look at their record, they don't want to take the examination, and part of my coaching is like a coach. I'm trying to analyze your form like a runner coach. Look at your form, look at your stride, how are you breathing, and you put all those pieces together, and then you have a great routine where you can actually win. Right? But if you're hurting yourself by trading on days that you're not good at, I analyzed one guy's trade, like, on Monday, you just lose money on Monday, and you spend Tuesdays, Wednesdays, and Thursdays making it all back, and you usually do, but then you end up giving it back again on Friday trying to hit a home run. So I was like, just stop trading on Monday, turn the computer off, step away from the keyboard, put your hands on your head, step away from the keyboard, right? And go do something, like talk to your family, or like read a book, right? Get away from the computer. Come back on Tuesday. And when he just did that one thing, he just went up. He just increased his weekly return by a full percent, which is huge. Okay, so being able to analyze and find out what days. So I found out that that last week of the month I'm not too good, So I kind of like decided to take that week off or trade light, at least get my position size down. Being a scalper, you get kind of addicted to the action. So I just get really small, or go demo, or go into like very small lots or simulation or something, right? Pencil paper, like Pitbull, Marty Schwartz. Pencil to paper, go to get the pencil, get the paper, write the price down, and where you think it's going to go, and just watch it. That's the first simulation. It's called paper trading, right? Because you need a pencil. Okay. Anyway, so we got this nice drop here, right? Now, what's going to happen? We look at if you switch back, and just simply look at the opposite one. EURUSD is called the anti-dollar. Money moves from something goes bad in Europe, hey, the money flies back to the U.S., right? And if something goes back in the U.S., it flies back into Europe. So we got this yo-yo effect. Same thing here. Consolidation sideways in the euro, breakout north. Here we go. Bam, north side breakout. I scalped this south here from this reversal candlestick pattern called a evening star, a bullish candlestick with a long wick candle. And then I have candlestick triggers, and I actually got a trigger entry here, and that's where I was going monsterly short. You're like, Greg, non-farm payroll, it's like, yeah, but I got a little bit of a, getting that, I think all my trades were looking at that level, that all those south of one spot 1270. And the moment we crossed that, we started moving down, right? And I kind of like lost that picture, but it's cool. You get the idea. Okay, so where we go from here? Well, the euro's in an uptrend. Okay, you might see a bit of pullback on Monday, and now so I just wanted to show you just how powerful non-farm payroll is and why prices go sideways for the whole entire week. Look, the second, the first, and then boom, on the Friday we get the big breakout. The first Friday of every month is non-farm payroll. Okay, non-farm payroll is like the report card of the economy. If you're not creating jobs, your economy is weak, and the U.S. is like a company, just like a stock market. You have like an IBM, or you might have a 3M or some other company. And if they have that, if they are a growing economy, if they have a growing sales, growing revenues, their bottom line is good. Their top line is good. They're getting new contracts. There's all this good news surrounding the stock. The price of the stock goes higher. Okay, now for countries, it's their currency. The currency, it kind of looks like a stock certificate. In fact, if you look at a dollar bill or $5 bill or $20 bill, $100 bill, it kind of looks like a stock certificate. So guess what? When the U.S. has negative news, the dollar goes down, and the value of the dollar goes down. Okay, so think of countries in terms of companies. Think of their monies in terms of stock certificates or stock prices, and we can see that their relative value goes down versus other countries are that, and that's the whole how Forex actually operates. Okay, so let's go into our charts. I just wanted to do a quick shot. Look at the Dixie. We don't have the Dixie on that, but we do have it here. And here's a euro. Here's a euro, and now the way I do my charts, for those of you who are just like maybe new to what I'm doing here, is I do have daily support and resistance lines, which I have. That's like, this is the market map, like a map, treasure map. And at the turning points of this treasure map is where we look for, that's where we look for entries. Where price hits one of these red lines and changes direction, that's where we want to be long or short. Okay. Now in this case, we can look at this daily chart. It's like a 50,000 foot view. It's like a big overall view of this price action. Okay. We've got this big view. It's from September 2016 to June. So that's a good amount of time. So we can see that we had downtrend, bottoming, and an uptrend. Higher swing highs and higher swing lows. Now, all those trades I took on the scalp side were all counter trend. They were counter trend scalps. So, and you can. That's a more advanced method of trading, okay? But if you want a high probability for those that's not so difficult, riding that trend is. Here is the again. This is the my Friday's trades, and I was just going for nickels, taking the nickels. But look, 71, 73, 70. Anything about in the 70, I'm hitting it. 73, 73. I'm shorting it. 75. Why? Because we're at the bottom of that evening star, or the first half of the evening star. And I'm looking for 54, and see, I got down. I scalped all the way down. This is where they hit my level and turned and started going back up. But then I hit it back again and started doing it again as it double topped and came back down. Okay, that was just that little move, that little red bit of space there. So let's drop down to get you on the right side of the trade, not the counter trend scalp. All right. All right. So this move down here, and we got down to, let's see, the low. We got down to right here. This is the move. Just in here. That's that. 10 G's just in that. Okay. Now I was on a 3-minute chart doing that too, so really small time frame. But look at all this support. This is a daily support line. Now we're down to a 30. We can see price came up. Now usually price is like think of the whole mechanism as like a bow and arrow or a crossbow. I love crossbows, slingshots, because you got to go backwards before you go forward. Okay, you got to go backwards before you go forward. Okay, so think of, because remember, Forex is a stop-driven market. It's driven by stops. It's driven, the fuel to make a price go in one direction is based on all the stops behind it. Okay, when there's not a lot of stops, there's nobody to drive it, right? And what do you mean? You say, what do you mean by that, Greg? Well, let's say no, we think the price is going to go much higher. This is an uptrend, right? Well, if everybody's bought, right, it don't go anywhere. Are you going to buy anywhere? No. Are you going to buy anywhere? No. The price goes up. The next called the greater fool theory. There has to be a fool that thinks it's worth more than the other. Think of the housing bubble or the tulip bubble, or even think of Bitcoin right now. You've got more people, buyers. They think that it's worth more than it's going to be. It's going to be worth more even in the future. People keep buying. But if everyone who's going to buy bought, and no one's buying anymore, and they're like twiddling your thumbs, we're not going any higher. I think I'll get out. I think I'll get out. I'm getting out too. And then you start getting these pullback of people taking profit, right? And then prices, and then somebody might just say, all these guys are long and nobody's short. A lot of complacency there. Let's start pushing it south, guys. Start shorting. Bam, bam, bam. And you start hitting people's trailing stops. You start getting big gaps down, and we get pulled back to support, to where all the buyers are. They keep pushing price down until there's support. And where there's buyers there, they know there's buyers there, and more buyers step in and fuels the market. So, plus these guys who are long, you have to buy their positions back, right? They have to sell their positions to get out. So guess what? As price comes back, they become unwilling sellers in the market. Sold, and price keeps falling as it keeps selling. It kind of fuels itself. So price comes back down, it comes to a certain level when we can't pull back in that bow and arrow, that bow anymore. Boom, then price goes forward. No one left to sell. Anybody's gonna sell? I'm not gonna sell. You gonna sell? No, I'm not gonna sell. Hey, this thing has stopped moving. I'm gonna buy. And then boom. We get that rally to the upside, got a short squeeze rally to the north side. So think of the bow, so you want to be buying on the pullback or selling on the push up, sell high, versus, unless you've got like a really long consolidation pattern here. But look what happened here. It's long consolidation, pull back on the bow, and then bam, shoot to the upside. Okay, so enough of my bow analogy. I'm looking maybe 112.56 on a pullback. And we get a pullback down to there. I look for a move back up to like the one spot. I think we'll break 1.130. We do have the ECB rate decision coming up this week. We also have the Australia rate announcement coming up this week as well. So we'll see. Let's keep on going. Let's go to dollar CAD and move it down to the. We'll go to a daily chart. And I know I recorded this earlier, but man, the sound quality was so bad, so I'm sorry about that. But here it goes. This is CAD daily with these daily support and resistance lines. I pop these lines on swing points, and I draw them into the future. And these two ones I added, but for the most part, these lines have been on this chart since February. I haven't drawn any new lines, or very few new lines. Okay, so basically I'm seeing that we've got this downward move. We have this rise here. We're rising into this 135.83. I look, if we break below 134.62, maybe 134.50, we could keep going back down to about maybe the 133.00 whole number round number area, and we can go to maybe a 60-minute chart, and we can see now we're coming close to some support here. So I might think we might get maybe the Looney's kind of crazy anyway. That this thing, instead of going back and then that may go down, hit this daily support to hit those stops, bounce, and go higher, and then you'll have to short it again, maybe somewhere around maybe this congestion zone here where all this stuff is here. Maybe we get back to like 135.30 for a short, right? Remember, we want to sell high, not on marijuana or cocaine or anything, but sell higher, and then close it lower. So, but right now this thing looks like it's extended, and we should see some type of rebound. You could play the counter trend, stop below 34.80 for a bounce higher. But it's a little bit more. The risk really, if you really look at it, the risk is kind of small. I mean, that's our. Come on. All right. Trying to bring that entry down. I guess it won't. I guess that's the entry, right? All right. So like that, and you're looking for maybe a move back into this old congestion zone up here, right? Those wicks. That's not much risk to take this as a counter trend. Again, but it's counter trend. I'd rather sell from up here, going back down, maybe even sell up against here, 35.38. I can sell here. I got a nice daily resistance line and lots of congestion. That is like the ideal, like Santa Claus, give me a new bike, give me a shot at 35.40 for a short back down to like 3,300, right? But I just gave you the counter trend that just in case if you want to, the risk is small, the probability. I mean, you've got a downtrend, and the downtrend should continue, but we all know that you've got a downtrend here and you get a spike what happened here, you got stopped out, right? Now if that doesn't work, sometimes you get a little too smart for your too smart for your britches, as my grandpa would say. There's daily. Here's a gold Kiwi dollar. Let's keep it moving. Oh my goodness, higher swing highs, higher swing lows, big bullish engulfing candle, but we're at a near level of daily resistance. We might get a little bit of a pullback here. Again, I like to buy in the pullback. And, we got some good data out of China. China's been strong, and New Zealand is a big supplier of dairy products, and it's called the breadbasket of Asia. And so we could possibly see a continual move of Kiwi dollar well into the maybe 74 area, back to these old highs, back 73.80. But let's look drop on down to a maybe 60-minute chart, drill on down. Now we are again approaching not much space. I mean, if you were to take a risk reward, if you get long here, short, it goes to stop below here with an entry there is not about 6 pips, right? There's resistance here. I would rather wait for a pullback, a reload, maybe be able to come back in here at 71.08, a pullback. Look for a pullback to support for a possible move higher. You're looking for some type of a pullback, some profit-taking decline for that springboard up. So these stops get triggered, maybe even down to that blue line at 71.04 is that wick of this candle, and we may get down in there, and that would be a nice place to get long on a pullback. So I'm bullish Kiwi dollar. Okay, cable. No, we got parliamentary elections this week in the UK. But we got a nice bounce off some key level of support 12777. Very anemic though bounce. We got 2 days where we've just been in a range, and we just had non-farm payroll. This is like where the pound could have really shined against the U.S. dollar, and it kind of like went, not much of action there. In fact, we got a doji after non-farm payroll. Are you kidding me? That means indecision, right? A decision at the cross. Is this thing going to go to heaven or to hell? I don't know, but there's a cross right there. And that's how I remember what a doji is. Here, break below the low, the doji, boom. That's a doji trigger. John Person, National Futures Association. That is a powerful video series I got from him. Those the doji triggers. We can see a doji trigger here if we could break above that. All Tony Crable as well, all the greats. I like giving homage to the greats guys, the guys who pioneered this stuff. I kind of like put it together and present it to you because you're probably not going to research them. You probably don't even know who they are. But these are great men of great trading. I was trained by Mark Douglas, and and he just passed away as well. George Lane passed away. I would love to meet the guy who invented MACD, Gerald Appel. His name is like with fog, but I would love to meet him. He's getting up there in age, and love to meet. I love MACD. It's one of my favorite indicators. But these guys, they pioneered this stuff, and there's nothing new under the sun. But this is some good stuff here. Gotta know what to look for. Breakout above the high, and we look for a continuation. If the conservatives win a big, and Theresa May is able to hold on to her, to her majority, then we could see the market likes Theresa. They love Prime Minister May. They love the Conservative Party. It's pro-business, all that stuff, blah blah blah, and that's good for the economy. that's technical. Blah 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 is a technical term. So if you see conservatives leading the way, blowout north side. We see 130.52, lickety split. Okay, it's almost like the French repeat of the French election with the Macron being Le Pen, and you saw the big explosive move in the euro. This is basically going to be like French election 2.0, but it's going to be in the UK. And the conservatives. I've seen guys in the UK on the ground in the UK. If you are in the UK, let me know about what's going on. I'm not watching the UK TV. I'm trying to watch the BBC. I'm looking at some articles, BBC and stuff. I've been retweeting some BBC articles as well. It's always good to have some news information outside of your country because your country, every country is biased. So it's always good to look at someone else's country about what they have to say about what you're saying. They give you a more well-rounded picture. Trust but verify. Okay, here we go. 30 is a 30-minute chart, and there's that daily support zone. We bounced from that, and then now we could probably see this next one coming into play, 29.12, and we're currently at 28.89. So we got some pippage there. Old 30-minute high stands at 129.21. So I'm bullish on pound, kind of more cautious because of the election, but I think Teresa's got this. I think she go girl. I think she got this. Okay, Aussie dollar and daily chart. Now this is kind of interesting because we're below the 200 simple moving average on the daily chart. Big, strong, bullish engulfing candle, kind of pseudo bullish engulfing. But it's below the 200 simple moving average. We're sitting at a daily resistance zone, and you're just wondering, they also stopped right. I drew this line back in February, right? Price stopped there, and so we could probably see some type of a Harami reversal off this 74.57, and maybe come back to test 74.16, right? And then that might, stop out some of these guys who are maybe, trailing their stops up. Maybe price comes down and hits them. I think this goes up eventually, but we're below the 200, and they do have the RBA rate announcement. If they come out with like really a dovish tone from the RBA, the statement after the rate announcement, because nobody wants their currency high, okay? Because everybody's trying to talk it down. Except Donald Trump is a little bit more obvious about wanting the dollar lower. And he does doing some really visible things to get it lower, all right? I think probably in history it'll go down, when all this blows over, he'll probably say, wow, he really did all this stuff. Is all on purpose in order to get the dollar down lower to spur foreign exports. U.S. exports to foreign countries, right? Yeah. So, anyway, I'm looking for, if they come up with a dovish statement, I'm looking for a retest of 73.25. Might be a nice double bottom for a move up. We might even squeak down a little bit lower, down to 72.86. So, I know the dollar has been on a tear. Been a loser against a lot, being beat down. I think Aussie might not. I think it may not hold. Okay, I think we come back and test the 73.25 and give us a shot down, and from there, then we could probably get. I think Aussie will lag the other currencies, right? So that might be something to look at. And we can look at a smaller time frame too. Take a quick look there. Daily resistance zone. Barely above the 200 moving average. I think we get a pullback, and I'd love to short this baby. We're not yet unless we can stay above the 200 on the daily chart. We're still in the ghetto, right? Everything above the 200 moving average is like, the suburbs and everything below. That's how it is, in your community. I know in my community, where I grew up, there were railroad tracks, right? And you're on the wrong, we're literally on the wrong. The Alameda train, if you guys from LA, you know what I'm talking about, the Alameda train. And if you're trying to commute, and that train is like 4 miles long, and it stops for some reason, and you're stuck in the other side, you're not going anywhere. That's going to like paralyze LA, right? And if you lived on the one side of the tracks, you're in Watts, you're in South Central, on the other side, you're in Bell Gardens, you're in the other side, right? So literally on the wrong side of the tracks. The 200 moving average is like the tracks. And if you're on the wrong side of the tracks, well, you're a bear, okay? And this is it. Other currencies are above the 200 moving average. Aussie is down below. It's trying to come on up, right? I'm not saying he's down in the ghetto. It's a happy place. Don't get me wrong. I love Australia. I'm saying their currency is in the ghetto right now. Now it gets above 75.29. Oh, there you go. We're heading back up to 78, right? But right now, we're chopping around here south of the 200 moving average. That's the Alameda train. That's the, right now. Now, I remember when the kids, I taught at Jordan High School during summer school, and there was that train, the Alameda train. Some of the kids actually lived on the other side of the tracks. And when that train stopped, they would it'd be dangerous, but they couldn't get to school, and then they get detention, they get to school, or they'll say an announcement, please excuse the kids because the train stopped, right? And these kids would they want to come to school, they'd climb over between those box cars to get to school. I'm like going, wow, I'd say, look, train's right there, I'm cool, I'm staying on the other side. School, why were you absent? Because of the train? Okay, you're excused. Yeah, but we got a lot of stories from South Central. I could probably write a book on that. But there you go. Bullish candle. I don't know. 200 moving. I don't think we go much higher. But again, we could nudge up a little bit. But the RBA announcement's coming up, and that could really send Aussie the other direction. Now let's go ahead and get into the. I want to go to the Swiss franc. Swiss franc is like the opposite. It's like the evil twin of the euro, the doppelganger. Nope, that's the yen. The doppelganger of the, But, because why? Because it's USD CHF and EUR is Switzerland's in Europe, right? So countries that are similar in geographical proximity usually move in a similar direction, right? Like Kiwi, Aussie, and Kiwi. They're in the same, geographically, right, across the Tasmanian Sea, right? So you have this kind of correlation, right? Canada, the U.S. dollar and Canada usually move together, because their economies are kind of tied together. Now, that with the break of NAFTA and the renegotiation of NAFTA, you're seeing that dislocation of that market. But see, here we go. As the euro is breaking north side, look at this. The anti-euro is the dollar Swiss. Why? Because it's dollar in the base currency, and it's CHF as a Swiss is the counter currency. And CHF does not stand for chef or chicken or China. Somebody called it the Chinese franc when I used to be on the desk. I go, no, it's sir, it is Swiss. And he goes, how can you get Switzerland out of CHF? And it's like Council Helvetica Federation or something like that, right? My GMT is General Mountain Time. That was so funny. Oh my god. I think it's like General Mountain Time, like General Mountain Time. I mean, Greenwich Mean Time, right? Anyway, hilarious stuff. Another book to be written. Southside break, and here we go. We're at, might get a little rebound here. We broke through 2 levels of daily support, and so we can see a little bit of a rebound. It's below the 200 moving average. We're in the ghetto, so we're shorting it, baby. It's a short. However, a quick scalp off this low. I mean, okay, let me show you. If we got, I'm gonna drop you down to 3 minute. I'm gonna drop you down to my world. 3 minute chart. Look at that. Price coming down, flattening below wave 5 extension. Wave below this. This is advanced stuff here. You draw a trend line across this bad boy, and scalp this silly to the north side on some profit taking, right? Your stop is tiny. You have a tiny stop, and you know this. I'm just showing you an advanced technique. No cost to you. It's free, absolutely free. Okay. Greg, it's highly risky. I mean, how much are you risking? You're risking like 6 pips. And I want to go long. Yeah, there we go. There we go, baby. I mean, even up to 200 simple moving average, you know, that's, look at the risk reward on that. Okay. I'm probably going to, let me change this up. Stop maybe a couple of 7 dips down there. You know. And we could, you know, see a nice move up, even back up to here. Okay. 12 to 1 risk reward. All day long, I'll take that. All right. Anyway, moving right along, I'm digressing. Keep it going. Yen, dollar yen. Dollar yen took a bath after non-farm payroll. Now, from this satellite 50,000 foot view, using a daily chart, it's like, well, Greg, why are you trading on daily charts? I want the overall view, okay? I'm like a spy satellite, flying over the valley and taking a look at I got the lay of the land, right? Right now I got lower swing highs and lower swing lows. And I got a little higher low, higher high, higher low, but we're breaking down below this low, and so the downtrend seems to be pretty much in place, except that we got this 200 moving average, which is like having like, if you ever like, I remember trying to dig a garden when I was a kid. And don't get me, I was kind of a weird kid, trying to dig a garden, throw a lot of rocks in South Central, right? I'm like digging out in the backyard, hitting these rocks, right? And you know. And you see this, like, I hit this pipe. I'm like going, what in the heck is this thing? You know, like this is a sprinkler pipe, right? You know, and you know, and then you know, and sometimes it's cable TV. If they see those little flags, I always wonder what the little flags were. I go, I wonder what that flag is. I go, well, dig a little deeper and get electrocuted, and you'll find out what that flag actually is. But they laid like gas pipes and oil pipes, and I remember a buddy of mine, he was putting a fence and he was digging a fence post, and he cut right into the Verizon, the FiOS line, and just cut off all of the high-speed internet for the entire neighborhood. Boy, oh boy, did he have some angry neighbors at him. He just cut everything off, and they were out for days without that. Oops, my bad. So that's how these moving averages are aligned, especially the 200. The 200 is like a power cable that's buried, and you know, especially if you're on a 30-minute chart and you don't see it. This daily 200 moving average is like one of those electrical lines. As soon as something touches it, it rebounds from it. Meet Sparky. And right now, see, it can come back and touch it, and you know, sometimes it breaks and comes back down. Look, it gapped. You know, the shock gapped that thing up, and then you know, there's a little gap there. We may come back and fill that gap, right? I just noticed that little gap of space right there. And right in the 109.50 area, this thing could drop down to the 109. We got bearish engulfing candle. However, and again, that 200 moving average, I'm always cautious approaching that. I want to see it close below it, like 110.15, to give me more confidence about taking this short. But again, I want to see it break, retrace, pull back on that bow and arrow, go down and pull back, and then go, you know. And so that's let's take a look at go down the micro world. I'm going to go to the 5-minute chart. Now, see, very interesting. We had that big drop. Now, usually a non-farm payroll might have some profit taking, right? Maybe price rallies and comes back up. We're below this. We're not sitting on top. I'd be more likely this thing stopped there to take it on a bounce. It didn't. You know, it's kind of like hanging there. And the next one is down here at 109.44. But I would love to short this high and be able to get it back down in this area. In fact, I can draw a little rectangle around this baby this consolidation. After a big run, we see a consolidation, and then we'll see a run again. Usually where price enters the channel, it exits the way it comes in, much like jalapeno ghost peppers. You're around one of those suckers, those things are hot. They're hot. They come in hot, and they exit hot. Bam, You want that backsplash to cool you off, oh yes, man. Anyway, that's a graphical example of that. I hope that picture got in your head. And you probably say, oh, now I'm going to go wash my head out with Listerine or something. Thanks, Greg. Yeah, no worries, that's how I teach. And that's why it's really popular among the middle school kids. Okay. Let's go ahead and move down. We did look at the yen, and I want to take a look at dollar yen. Gold. Sorry, gold. There's gold in them there hills. Yes, there's gold. And, it's so odd, you say, oh, a bag of rocks, for young people nowadays, they're very digitally oriented. They go, how would anyone pay money for a bag of rocks, a bag of stone? Well, do you think it's even more ridiculous to, pay $2,700 for a Bitcoin, for some cryptocurrency? Are you crazy? Look at the $2,800. My goodness, I had some at $1,700. I thought, oh, look at this, nice little double bottom pattern rally back into the upside. Hello, Greg. Take your own medicine. Pull back before the extension, right? And so I'm kicking myself for getting rid of my Bitcoin. And we have the same, basically the same pattern again. Pull back, sharp pullback, and extension. This is just cryptocurrency, a mathematical algorithm, blockchain, blah blah blah. And, but I tell you what, if we have a blackout from an EMP burst in North Korea, my bag of gold will buy more bread than your cryptocurrency that's stuck in your hard drive. Guaranteed. All right? We'll see who eats after our blast. Anyway, give me a bag of rocks or a bag of gold coins any day. But anyway, just look at the disparity in price. $12.79.12 spot gold. Bitcoin, $2,800. Go figure, and can go higher. Anyway, my prediction for 1,300 gold is getting a lot better. We did do a dip. When Goldman Sachs recommended to sell gold, I knew that it was probably the time to buy gold, and we could probably see this old high 1294.41 coming into play. Drop down to a 60-minute chart. I'm going to go to a 30-minute chart. And non-farm payroll, you can see, bam, the dollar, gold is like the anti-dollar, right? Another anti-dollar. But sometimes the gold can act like a risk aversion kind of thing where people are running for cover and they're running to gold for safety. So gold is kind of like, it's like, it's bipolar. It can be a risk asset, or it can be a risk safe haven in case of fear of risk. And in this case, it's it's an anti-dollar play, and we could see maybe a pullback. Remember, we've got an extension. Would like a pullback, maybe down to 1274. Looks just like Bitcoin. In fact, that little pullback and the extension. We look for maybe some type of pullback again, maybe down to 1275, or break above the high in case you can't make it 1279. Then I'm looking for that next level of red level. Target zone 1296 to 1300 on gold. Okay, so that's it on the technical side. If you have any questions, let me know. If you're online, if you're watching this live, appreciate the thumbs up, the shares. Share the video. Go ahead and share it, like it, type a comment, and we can go ahead and answer your question. And that's what we like to do here. Do it first class. And let's see if we can get. Let's see if I can get. I want to get to the economic news there, and the news that confuse maybe. But we do have some big economic announcements coming up this week. A lot of holidays: Swiss bank holiday, Euro, the France bank holiday, a German bank holiday, all on Monday. New Zealand has a bank holiday as well. And so they might see some lower liquidity, less players in the game, which means less, fewer players, wider spreads, liquid moves. slippage, all those naughty things can happen on a Monday. So, but at 4:30 a.m. we do have the UK Services PMI expected to fall from 55.8 to 55.1, and that is going to be that would be kind of bad for the pound. And if this forecast, where forecasters like forecasting the weather, they tell you, hey, it's going to rain, torrential rain. You cancel the family picnic, and guess what? It's a beautiful sunny day, right? And then other days they'll say, hey, it's going to be a bright sunny day, and you're out there, your family picnicking gets rained out. Remember, so forecasts are like the weather. Take them with a grain of sand. However, they can give us an idea if the market is believing these predictions and then the numbers come out far different, then we can see the market is a discounting mechanism, and it's going to price in or price this news. So if it's pricing for a weaker PMI and it comes out with 56 or 57, well, guess what? The market will say, we didn't price that in. We actually thought it was going to be lower. So now the price or the value of the currency rate of the pound has to match the current news that's being released. Okay, the difference between the actual and the forecast, the result. Okay, now 10 a.m. ISM non-manufacturing survey coming out of the U.S. expected to fall from 57.5 to 57.3. Negative news of the U.S. dollar could cause the dollar to sink. However, if we get a surprise number to the upside, we could possibly see. Usually, we see negative news negatively impact the U.S. dollar. In the weird cases, and sometimes it doesn't. Okay, that's why we use stops, because if anything was certain, everyone would be a trader and everyone would be a multi-millionaire. But there we go. So 57.3, and let's go on down to Tuesday. We have the big one. We have the RBA rate announcement, expected widely to hold rates unchanged at 1.5%, and so that statement will tell you if they're bullish on their currency or bearish on their currency, or basically they're hawkish. They believe the economy is slowing down and they're not going to raise rates anytime soon. They're going to give some guidance. And if they guide toward doves, meaning that they want to raise rates, then you can see that Aussie dollar sink down to those levels that I talked about earlier. Okay, so wait for that statement, and the price action will show you where to go. 9:30, going to GDP quarter on quarter out of Australia at 9:30. Expected to fall dramatically from 1.1% to 0.3%. If that is so, that's maybe why these guys might be dovish, knowing that they've already looked at GDP. They already know the GDP number, so they're going to base any statement of the rate announcement based on what they already saw in GDP. GDP is a backward-looking number, and these guys have already looked at the number, and they probably saw, hey, we're going to have a slower economy, and if we do, then we're not going to raise rates anytime soon. And that would be negative for the Australian dollar. Okay. Now, at 3 p.m. on Wednesday, June 7th, we have the crude oil inventories with a draw of 6.4 million barrels, which is good for oil. That means a lot of people are using it, and there's not a lot of supply. This is called a draw, and that'll be really good. Well, Greg, I don't trade oil. It's just kind of worth my waste of my time. I'm going to tune you out, dude. Wait a minute, guy. If you trade Canadian dollar, it's highly correlated to oil. Canada is like the third largest supplier of oil, right? And so, they have a bunch of oil, and maybe we'll invade and take their oil. No. Anyway, no, just kidding. You take off, you hoser. Okay. Canadian dollar continues to strengthen. Remember, I was looking at dollar CAD short, and this could spark that move at 10:30 a.m. on Wednesday. All right, 9:30 of trade balance out of Australia, 3.11 billion expected to drop to 1.99. Now remember, these central bankers are probably looking at this economic data, and and so they know. And so the time this data comes out, they've already announced in the statement that it's weaker, and that's probably going to snowball that Aussie dollar lower. Okay. Now, China trade balance is supposed to be higher, so that might be an offset because Australia trades a lot with China, especially with raw materials. But this kind of movement in China is not the same economy. They're more of a service economy now, or moving toward domestic consumption. So they're maybe not so much of depending on foreign exports and foreign imports. So we'll see if that number has any effect on the Australian dollar. They're coming out. It's tentative. We don't have the exact time that's going to come out, and that keeps you on your toes, right? Now UK, their big day in the UK, big day in the UK, June 8th. That is going to be the parliamentary elections, and so we'll see if the Conservatives hold on to their some seats, and the pound bulls love the Conservative Party. So if you hear anything about the Conservatives having a victory, and you may don't understand UK politics, but if you hear the Conservatives are winning, they seem to be pro business and pro, so we might see the pound rally as a result. Now, also we have the minimum, the EU, the eurozone, the euro rate announcement. Spit it out, Greg. They're widely expected to keep rates unchanged at zero, but don't let that fool you, because we've had some really strong data out of the eurozone, and so what that possibly means is that Draghi maybe want to walk back some of that QE and maybe make a case for maybe tightening rate or normalizing rates. And with normalization, that means taking off some of the, shrinking the balance sheet, or whatever. And so that could cause the euro to go higher, because the market will move based on anticipation of tightening, even before an actual number. So this doesn't have to change from 0 to 0.5 for the euro to continue to move higher, okay? Because the mere idea, the discussion of rates going higher could cause the euro to move higher. And so we look for further, maybe break that one spot 1300 area at 7:45 on Thursday, June 8th. So we might have some sideways consolidation going up into that announcement too. And ECB press conference is at 8:30, and that's where, after the announcement, usually Draghi starts talking and tells us in detail why that rate decision occurred. And so, and if he's more bullish on the economy, then you can see the euro just kind of fluctuate. Every time he says something good, it's going to drive the euro in one direction or the other. Okay. Now, our next high impact number doesn't come until Friday at 4:30 a.m. It's manufacturing month-on-month manufacturing production out of the UK, and it comes in, supposed to come in higher, 0.8 versus negative 0.6%. And if this is in line with a good number, we could see the pound rally at 4:30 a.m. on Friday, just about an hour and a half after the London Open. So it might be a good setup there for some type of London Big Ben breakout. Okay, 8:30 a.m. we have employment change out of Canada, expected to rise from 3.2 thousand to 11.5, which could also strengthen the Canadian dollar as well, along with those stronger oil prices. Now the oil prices, you have to, there's always there's never like easy, because you've got OPEC trying to agree on production limits, but you have some countries like Kazakhstan. They're like, say, hey, look, all we have is oil, so we can't sell these rocks, so we're going to pump oil, and we don't care what you guys say. And then Iran is probably going to say, look, we've been on an embargo. Nobody could buy our oil for years. We got to catch up. You guys have been making all this money while we couldn't sell our oil. We're going to pump as much as we want, right? Now you've got Qatar and Saudi Arabia going at it, about those oil limits too. So maybe, it all depends on, what's going on with that alliance, that OPEC alliance, that monopoly. And we'll see if they can hold on to their cuts. If they do, that supports oil. If a lot of cheaters start cheating, then oil prices start falling, because we have too much supply coming in from too many people. Okay. Now, unemployment rate expected to rise from 6.5 to 6.6%, could impact the Canadian dollar as well. That's it for 8:30 on Friday, and so that's it for me. I want to thank you so much for watching me, and hopefully you are that this will help you in your trading. I wish you all the best. I will make sure that you you can contact me if you have any questions, any comments about what you just saw. You can email me at greg at elitetradersu.com, elitetradersu.com. Give me a thumbs up, a like, and let me know you're out there and that you enjoyed this live telecast, and so we do it again. And you can also, you want to check out my Forex heat map. My Forex heat map is a great trading scanner. So if you're losing money trading, don't know what to trade, get the map, My Forex heat map, and learn how to trade Forex. Why? Because I'm going to include all kinds of bonuses with that, including a desert for market scanner. the prices move up, we can see we buy in green, sell in red, and stay away from gray. And also, I'm going to give you the Forex Foundation's freshman course, absolutely free. You have access to that after if you upgrade to the gold member bonus. That's a gold member bonus. The Quick Start Forex Foundation's video courses, and also if you upgrade. There is $9,500 worth of bonuses there. Now you can try it for $1, and it's $21.99 a month, about 55 cents a day basically, or you can go for the year, $199 for the year, a year subscription to the My Forex Heat Map. That gives the access to the heat map and also the Pip and Run scalping community, where you can be part of other traders who are in our community, and we post charts, we post trading ideas, and it's a great place to join. You only can be part of this community when you become a My Forex Heat Map subscriber. So again, you can become part of the the Pip and Run Forex Scalpers Club when you subscribe to My Forex Heat Map at any level. Okay, but you can try it. You can try the community. You can even try this out for $1. Okay, so that's My Forex Heat Map. I can even put the www.myforexheatmap.com, and you can try that out for $1 and see how that affects your trading. All right, so that's it for me. Happy pipping to you. We'll talk to you later. See you soon. Cheers. Bye bye.